Okay, welcome back everyone. So we're going to start with question 2 now. So this was a theory type question that was provided in the test or in the exam. So this is where they test a lot of the basic concepts from Learning Unit 1. I don't expect that you would see this amount of theory in a question, but you never know. So we're going to discuss this anyway. So the first question is, name the person known as the father of accounting. Who was the father of accounting based on your textbooks? Okay, so the answer from the classroom here is Luca Pacioli, and that's correct. Okay, so that was the first question, just providing the name and surname of who created accounting, the concept accounting. Then question 2.2, here you have to state whether the question is true or false. Now, if you don't know, you've got a 50-50 chance of getting it right, then just guess an answer and write it down. If you are sure, then write the correct amount. Now, why say if you're not sure, guess. What sometimes happens is a lot of students leave something like this blank because they're not sure. If it's blank, I can't give you a mark. If you take a guess and you actually got it right, you can still score a mark. So you've got nothing to lose by just indicating an answer and taking a stab at it. Okay, so the first thing is creditors are also known as payables. Is that true or false? Okay, so the answer from the class is that is true, and that is actually true, yes. So creditors is also known as payables when we look at our international reporting standards. The next one is planning is an essential function of management accounting. Is that true or false? That is also true. So planning is one of the essential functions of management accounting. Okay, the next one. A trial balance is drawn up once a year. What do you think? True or false? Okay, this one is false because we actually draw it up every month. Okay, then the next one is our accounting equation. The accounting equation is assets equals owner's equity less liabilities. Is that true or false? Let's see what the guys online say. We just blew, yeah. Okay, so they say it's false. Okay, so that is false. It is correct. Okay, because assets, what is the formula? Assets equals what? Owner's equity plus your liabilities would give you the asset amount. So that's why that was incorrect. Okay, then the next one, cost of sales is not recorded at the point of every sale if the entity uses the periodic inventory system to track their inventory. Okay, so let me just read that. It's quite a mouthful. So it asks you, the cost of sales is not recorded at the point of every sale if the entity uses the periodic inventory system to track their inventory. Okay, so remember periodic is expenses. Okay, so Mapaledi says this is true. Now in this case, it is actually true because we do not capture the cost of sales using the periodic system at every sales transaction. We only do it at year end when we work out the cost of sales and then we record it. Okay, so this one, because it was quite a mouthful, you had to go read it at least 2 to 3 times just to make sure what are they actually asking you. Okay, then they ask you to calculate the gross margin if the markup on cost is 40% and then round it to your nearest percentage. Now your gross margin is your markup on sales. Okay, that is what gross margin is. Now how do I convert a markup on cost to a markup of sales? Now let's quickly see what it would have looked like to start off with. So we would have said, okay, the cost is 100, the profit would have been 40, and the sales amount would have been 140. Now what I want to work out is I want to know so the markup on sales is generally your profit over your sales percentage. Okay? So taking this information here to convert it to a gross profit margin. So the gross profit margin. So we know the profit is 40%, but I have to put it over a sales amount. Now currently the sales percentage is 140% based on the information they've given us, which gives you a percentage if you go work it out. Okay, you just have to multiply it with 100 to create a percentage, which would give you a percentage of 28.57%, or you could have just said 29% if you're rounding it up, and we would have marked it. Okay, so that's how you convert it. So you start with what information that they provide you, which you then capture here, and then taking that information, they are testing if you know how to work out the gross margin percentage. Now the gross margin percentage, I'm just going to write here, is your profit over your sales. Gives you your gross margin percentage. Okay, and that's how you got to that amount. So in a question, they can also give you this information and expect you to do the same conversion before doing the journal capturing. Okay, so be aware how you should convert it and how this principle works. Okay, do you guys have questions on this one specifically? Are you okay? The ladies online, do you have questions on 2.3? Okay. Then if we move on to question 2.4, they ask you, what is the purpose of skills development levy? So what is the purpose of skills development? Why do they charge that to companies? What is the purpose of it? Yes, so to encourage learning, let me just spell here correct. Learning and development. So they want you to develop your staff and train them. So this is why they charge that levy, to encourage employers to actually develop and grow their employees. Okay, the next question is, what is the purpose of running the year-end procedures? So that's learning unit 9. When we do the year-end procedures, what is the purpose of it? Why do we do it? Okay, so we do the performance of the business, but not only the performance. What else do we also look at? Okay, so the financial position. So we look at the financial performance. Just going to type here financial performance, which is the profit or loss, and the financial position, which is our net worth. Okay, so if you wrote their financial performance, financial position, that is what they were looking for. But if you also wrote there for me to calculate what is the profit or loss for the financial period and the net worth of the business, I would have actually given it to you as well. Okay. What does the abbreviation EFT stands for? If you make an EFT, what does it stand for? Yes. Okay. Now, what do you think is the benefit of receiving money via EFT instead of a check? So why would you rather want an EFT than a check? Okay, so one of the answers here is an EFT is quicker. Okay, what else? Okay, EFT is safer in the sense that with an EFT, the money is in the bank account and the bank guarantees that that money would be given to you. Whereas with a check, you deposit it at the bank, and the bank has 7 days before they actually release the money because they first have to verify that there's sufficient funds, and there's a whole process that goes with it. So with an EFT, the bank guarantees that money is actually in your bank account, where with a check, that check can still be returned and bounce. Okay, Mapaledi says it's less time consuming, so there's less time between when you get the money on an EFT versus a check. Yes?
On the EFT, like using EFT, it can actually like reverse the money as it is once it goes into the bank.
Okay, but that happens when there's insufficient funds in.
No, like you can reverse it on the app.
Oh, on your app.
If someone get it, and like literally 5 minutes after, then you check the whole amount. As long as the person did not take over the amount, you can get it back.
Oh.
Yeah.
Okay.
So,
okay, so in that case, then. Okay, but normally the bank will guarantee that that money is in your account. That's generally how an EFT works. The app has their own things. Now, with an app, if they then put the money in and they reverse it, it means the bank hasn't run at the end of the day, they run all of the transactions. The one that once that's happened, you can't actually get it out again.
No, like it appears in the balance. Like if it's gone, you need transfer it home. You get the money, you can use it then.
Yes.
But as long as you do it, you have to reverse it.
Okay. Okay. But yeah. Okay, well, this is a theoretical answer based on what's in your textbook. Well, that's probably how fraud happens and all of that. Yeah, well, that's probably how the guys that sort of scam you, show you they've put money in, take your goods, and then take the money back. But that's normally why you wait a day or so to see if the money stays there. Okay, but the theoretical answer for this one is that generally with EFT you get the money quicker than with a check, and the chance of a check being returned because there's insufficient funds is generally higher than with an EFT. Okay, because the EFT, if there's insufficient funds, it would bounce automatically, versus a check, there's a longer period of time. Okay, so what they said based on your textbook is the bank guarantees the EFT whilst a check can still be returned. Okay, so that's more or less what you had to write to get the marks for this specific question. Okay, then the next thing they ask you, give reasons why each of the following users of accounting information would be interested in a particular entity's financial statements. Now you have to go explain why this specific user actually wants to use your financial statement. So give a reason as to why they're using it. Okay, so a lender is someone that borrows money to us. Why would they want to look at your financial statements? What information would they want to see? Okay, so one of the responses is see if you can actually pay the money back. Okay, what else? Okay, so a bank might also want to use your financials to see how much money they can give you for a loan. Do you have sufficient assets to cover that? Okay, so they normally want to see if you are able to loans and interest, if you would be able to pay it. Now this can be when you already have the loan or whether you're applying for a loan. they will look at this information to see will you be able to pay the capital portion back as well as the interest that we are charging on that amount. Okay, for investors, what would an investor like to see? Let me just see what comments coming through here. Okay, so Mapaledi asked, wouldn't they want to see your creditors control statement? Okay, so Mapaledi, remember when we talk about a financial statements, we are showing all of your assets, all of your liabilities, as well as your owner's equity. So they're not going to look at your creditors control statement, but they will know what your total creditors control balance is based on your financials. So it would show everything that you owe as well as anything that you own on that financial statement. So it will show them we call it a snapshot at a specific point in time to show how much money do you actually have versus how much money do I still need to pay. And then based on that information, they will assess if they will provide you with a loan or not. Okay, so we don't use the creditors control statement because the creditors control balance is already reflected on your set of financials. Okay, so investors. What would an investor like to see? Okay, so one of the answers is to see how much money they can get on their return of investment in a business. Okay, now generally your investor uses that information to decide if they want to buy shares in the company, if they want to hold their shares, or if they want to dispose of it. So investor specifically looks at the information in your financials to decide what to do with the shares. Am I going to buy them? Are they still profitable at the moment, or do I need to get rid of them? Okay, so it's to buy, hold, or sell their shares or investments. That's what investor specifically looks at in this scenario. Okay, customers on the other hand, what information do you think a customer would like to know? As a customer, what would I like to see? Okay, you won't necessarily know the pricing based on the financial statements. That you would get more out of a management report. Financial statement shows you more the assets, liabilities, the income, the expenses. You can get an idea of what the pricing is based on the information, but it's not that easy to get all of that, especially if they've got multiple products and product lines and that. Okay, so a customer would actually use your financials to see if your business will continue. So I want to see if I'm buying products from you at the moment. Will you continue your business or do I need to start looking for a different supplier? Okay, so your customers generally see if the continuance of a business. That's normally what they specifically would look for. Okay, specifically if you need specific types of goods and services for your company, you would want to know, okay, will you still be there in the next 6 months or do I need to start looking for someone else to supply me these goods or services? Or should I potentially import them myself? It all depends on what the scenario is. Then 2.9, they ask you, if an entity sells goods on credit and for cash, would their bank balance at the end of the financial year match their net profit? Yes or no? Okay, so if we sell goods on credit and for cash, would the bank balance at the end of the financial year match their net profit? Yes or no? Let's see what the online group says. They say no. Okay, so the answer is no. And the reason for this is there might be VAT that you have to take into consideration, as well as there might be some the goods that you've sold, there's additional expenses you need to take off. There might be amounts that needs to be written off. So what you've sold, there's additional cost and expenditure that you need to take into consideration. So that does not necessarily relate to a sale as well. And that's why the two won't necessarily match. Okay, let's see if there's one more question. Okay, so the last question is, which of the following costs would be included in the calculation of cost of inventory? Okay, now remember when we talk about cost of inventory, we said we include costs that will bring that product to the location and in the condition that you need it before you can sell it. So salaries of office staff or wages of workers who manufacture the final product for sale, the inventory. Which of those two would you include in the cost of inventory? Okay, so the wages of workers. So I'm just going to say yeah, yes, that one. Okay, so that is what your answer would have been, just writing that bottom part. Okay, so this is question number 2. Do you guys have any questions on this? The ladies online, are you fine with question 2? Can I move on to question 3?